Good afternoon, everyone. Welcome to our next session, Top Logistics Risks and Trends to Prepare for in 2025. I'm Alejandra Carranza, reporter at Supply Chain Dive, and I'll be your moderator for this session. So, some of the main topics we'll be discussing are the shift in imports due to tariff related frenzy, recent rules around de minimis partial shipping, and the current administration's push to strengthen U.S. maritime networks with a focus on decoupling from China. At any time, please feel free to pop in questions in the Q&A panel, and we'll do our best to get those answers. So we look forward to hearing your thoughts. So next up, we do have our panel of speakers joining us shortly. Each speaker will introduce themselves and tell us how their career helps inform their perspective on the top logistics trends. So first up, we have Brian Kobza joining us from IMC Logistics. Go ahead, Brian.
Hi, good afternoon. Brian Kobza, part of the IMC Logistics team. We specialize in landside logistics in every major port and rail market around the country. Myself, I've been in the industry for about 20 years and having a really good time having these type of conversations at a higher level and creating a bigger, more important conversation on the resiliency of our industry. Thank you, Alejandro.
Awesome. Thank you, Brian, and welcome. And then next up, we have Anders Sonneson from AP Moller-Maersk.
Yeah, hi there, everybody. I'm Anders. I've been with Maersk for 20 years, doing ocean shipping more or less for 20 years, trade management in Copenhagen and Asia, and also now in North America since 2 years. But I worked with North American markets more or less since 2011. So I think I have good background in terms of ocean and North America to share some insights. So happy to be here.
Awesome. Thank you, Anders, and welcome. And then we have Laurent Denabue from Seco Logistics.
Thank you, Alejandro. Laurent Denebourg, so I'm currently working for Seco Logistics. It's a global freight forwarding company that we do have office pretty much globally everywhere in the world. I started my career with Panalpina, which is now DSV on the air freight side. And then I joined Geodis and worked in the US and in France, and with different responsibility over different regions. Then I joined a French freight forwarding company called Bansard, who is very strong into the former French speaking countries, and with also offices pretty much all over the world, and currently working for Seco Logistics, who has acquired Bansard a few years back. And I'm currently overseeing the air freight product globally. I do have experience moving a lot of air freight, but any kind of commodities from alcohol product to defense to food product to special cargo, special size, and e-commerce. Thank you.
Awesome. Thank you, Laurent. So thank you, everyone, for the introduction. Now let's get the show started. So to start, I think it's pretty fair to say that tariffs have been one of the main concerns shippers and carriers are looking out for. Every day, stakeholders look out for the next tariff-related move from the Trump administration. So I want to start it with Anders. To start off with you on the ocean shipping side, there's been some tariff-induced front-loading that has been going on for quite a while since tariffs were first announced. So I wanted to hear your thoughts on, are shippers still front-loading cargo? If so, why or why not?
Yeah, just like you said, Alejandra, I mean, we started to see it in Q4 last year already that the front loading started. And we saw, I mean, it's difficult for us to figure out, is it front loading or is it just normal cargo flow? But based on the discussions we had with our customers, we know that a lot of customers try to prevent, paying tariffs and shipped out early. So we saw a very strong ocean market in Q1 this year. And then in April, when the tariffs were increased, sharp decline. During April and up until mid-May. I think that's what we saw. Everyone here on the call probably knows about that. And from mid-May onwards, we saw a big increase, again, of volume. So it's been very much, so the front loading, I would say, took place more before the tariffs were announced. And now in between, when the tariffs are first increased and decreased, I would say it's a more, a lot of planning for our customers to try to beat the tariffs. So, get their cargo into North America before the tariffs are implemented. So it's been a lot of back and forth, I would say, and a lot of shift in demand, which has been difficult for our customers to manage, but also difficult for us as ocean carrier to ensure we have enough capacity when the customers needs it. I would say overall, we see the underlying market still relatively strong. Of course, it's very difficult to isolate out what is cargo rushing through to tariffs and what's the underlying market strength. In any normal year, it's also difficult to figure out how strong the market is, and in this year, it's even more so difficult. But we see the underlying market continuing to be relatively strong. But I would say what is very clear is that we see more of a push for volumes coming out of Southeast Asia versus China. So this is nothing new. On the Trans-Pacific trade, we've seen that Southeast Asia has been growing much more than China over the last 10, 15 years. But in the last year or the last few months, we've seen Southeast Asia growing even more. So I would say the trend that we're seeing related to tariffs is very much shift from China into Southeast Asia. China is still the biggest origin, over 50% of the markets, and we need a good a healthy relationship between China and US, because we need the volumes to come out of China as well. But we certainly see that customers are shifting their sourcing from China to Southeast Asia if they're able to. So I would say that's the big shift we've seen. And then it's more following up on what's happening in the news, what tariffs are implemented, and the customers trying to beat the tariffs, and we try to support them best we can.
Thank you, Anders. And then, Brian, I wanted to move on the drayage and intermodal side. How has front-loading patterns impacted trucking volumes and pricing?
I think Anders hit it right on, right? This is whether it's front-end loading or there's just a change in shifting, it's a definitely large change in dynamics. I mean, 2024 overall import volumes in the US was up about 15%. And then the first half of 2025 was another 9% above that. Second quarter, we're seeing a drop now, right? It's about an 8% drop in year over year. So was that front-end loading, or was that trying to get ahead of the tariffs, but keeping up with demand? And we're looking at it as we actually think it was more of keeping up with demand, because the overall inventories haven't risen all that much year over year. It's about the same, and it's keeping up with sales. So the resiliency of the market here and the consumers is still strong. So I agree with Anders in saying that we actually think the rest of the year is going to be solid. And on the land side logistics side, we're making sure we have enough drivers to keep up with the demand. We're continuing our recruiting and growing our employees and our asset base to make sure that we're able to deliver for our customers, no matter which coast it's coming into, because the difference in impacts and volumes is different amongst the three coasts in the US. The West Coast is seeing a pretty strong surge right now in July, while the East Coast and Gulf are about 5 to 10% off. So we're seeing a shift in demand. So we're putting our focus on the West Coast right now to make sure that those ports are being serviced fluid-wise from our assets. And then on the rail side, because it takes about a week or two for the containers to get from the West Coast ports into the inland markets, we're positioning our assets to be able to support those rail hubs and distribute to the DCs. We do expect August to be an East Coast growth. So we're ramping up for that and hiring drivers, hiring dispatchers and personnel, and making sure we're getting in the right position to service our customers overall.
Thank you, Brian. And then, Laurent, how about for air cargo? How has front-loading impacted the air cargo industry so far?
So we have seen a lot of volatility into the air market, especially since the beginning of the year. We as SICO has seen a big increase out of a Transpac demand. And like Anders has mentioned, we also seen a big shift into different markets where you see more and more demand coming out of Southeast Asia, especially like Thailand, Vietnam, Indonesia, Malaysia. Those are the main Southeast Asia countries where we see a big surge into demand. But definitely more demand on the air side, but also the big challenge on the air side is that carriers had to adapt to all of those changes and had to switch some of the capacity to different markets. So also it can be a little bit tricky from time to time to get access to capacity at decent pricing as well.
Thank you, Laura. And then I know we're living in a current market where it's very hard for predicting stuff, how it used to be a few years ago. So I know this might be a little bit tough looking into the future, but Can you guys tell me a little bit about for the remainder of the year? Do we expect shippers to continue to front load? I know you guys touched on it a little bit, but I wanted to see if you guys had anything else to further expand. I'll start with Brian.
Yeah, I think Anders was saying it, and so was I. I think the rest of the year is going to look strong. And I'm not saying super high peak volumes or anything, but solid volumes coming through. Driver capacity is still good, but our greater issue right now is with the increase in demand on the volume side is that pricing hasn't been able to keep up with that demand. We would say we've been in a freight rate recession for the last 2.5 years or so. So the push here will be with our customers to understand that we want to make sure we're providing our drivers and our employees with the highest living wage possible, and to make sure that we're supporting them accurately. So we'll be driving our business to increase our capacity in drivers, but keep up with it through price to create more stability with that predictive in the future.
And then I'll move it over to Anders.
Yeah, I mean, I think I covered it. I mean, like I said, we see a good market, healthy, durable goods consumption. Whether it's front loading or not, I don't think the front loading will continue as it's done, last year or early this year. It will be more depending on what's happening with the tariffs. There's news every day, and then, if there's extensions again on some of the tariffs, that could lead to a sudden rush again to prevent, reducing risk for the customers of having to pay more. So I think the dynamics is going to continue, but I don't think it's going to be like the heavy front loading we saw early in the year.
And then Laurent, if you have any additional thoughts.
Yeah, I mean, pretty much in line with Brian and Anders. I mean, definitely on the air freight side, September, October, we're getting into what we call the peak season. So typically we see a surge into demand. So capacity will be always a challenge. And if we keep on seeing the front loading push, I think it's going to bring more strain on the capacity available in the market. But definitely we see a big push also, like from key other markets, outside China, Hong Kong, but we see a big surge since the last year out of Bangkok and Vietnam.
U.S. retailers, Alejandra, are strong. They're resilient, right? So back to school, Halloween, and Christmas is coming up. So if inventory levels and sales is even right now, then there's going to be a need to increase those inventories and get ahead of it for these holidays and major shopping seasons to come up.
Thank you for that. And then before we switch topics, we did have a question from the audience in relation to what we're talking about. Will China suppliers be able to continue diverting through lower tariff countries to avoid tariffs, or will that be cut off as well? I'll leave it free for all if whoever wants to jump in on that.
No, I mean, no, just, like the Trump administration, is very aware of the situation where a lot of the freight has been moving to nearby countries and to bypass the exemption out of China and Hong Kong. And they've been putting sanctions in place. So I think it's something we need to be very careful and cautious. And we're seeing also like the border crossing has been a bit more tougher into those regions as well. So yeah.
All right, so we'll shift on to the next topic about the de minimis rule around parcel shipping. So Laurent, this actually I think is a great topic for you to kick off on. I was wondering if you could explain where the rule stands as of today and how our customers reacting, if at all.
Yeah, so the minimis rule, it's about the section 321, which is related to the entry type 86, so the customs clearance side, when you import goods into the US. So pretty much it's setting standard for any shipments or any goods that you bring into the US that has a value of $800 or less, where they are exempt from duties and taxes. As of May 2nd, through an executive order, President Trump has lifted that exemptions for shipments from China and Hong Kong. And recently, they passed into law that as of July 1st, 2027, that same exemptions will apply to any countries in the world. So just to recap, so currently, if you're importing from China, Hong Kong, you have to pay duties and taxes. If you're importing from other countries, you still, as long as the goods are, over less than $800, you do not have to pay duties and taxes for the next 2 years. So of course, these rules has brought a lot of changes and challenge and nervousness into the market, especially into the e-commerce sector, which represent about and of course out of China and Hong Kong. When we look at all of the e-commerce coming into the US that were applying through that exemption, 75% of shipments, 76% of the shipments were coming from China, Hong Kong. And recently we've seen a surge, a switch of different suppliers. Suppliers are trying to diversify to other markets, but also like carriers. Carriers have been putting a lot of freighter capacity into China, Hong Kong, and they have to switch and put that capacity as well. So there's a big change in the market, and it's a very dynamic environment.
And then for supply chains that rely on the de minimis rule, what solutions are available for them? And do they have time?
Yeah, so like, currently, the key thing is probably to try to diversify your suppliers as much as possible into different markets outside of China, Hong Kong. You can, of course, try to bring in cargo as much as possible into the US or into some regional hub, and then you make a better use of FTZ or bonded warehouse and so on to try to minimize some of the impact. And also because we started to have clarity on the trade the trade regulation between countries, we can help clients to analyze based on the model if it will make sense to start producing locally or still relying on different markets and so on.
And then just one more thing from the audience, have you noticed a shift in modes due to uncertainty? I know there's a lot of uncertainties, but since we're talking about the de minimis rule, I wonder if you can talk on that based on if you've seen increased freight from air freight to ocean.
From air freight to ocean, but we also see a lot of freight movement going like a mix of air freight and ocean, or ocean and air freight, or into some other market, train and air freight, and vice versa. And so we do see a lot of different switch into the transportation mode, and we see also like a switch in the market where clients understand that transit time, if it's air freight, is not necessarily overnight. Or if it's overnight, it's going to be at higher price. So customers are able to stretch a bit more than need in terms of urgency of the freight.
And then switching it over to Brian, do you foresee like this new rule impacting drayage or cross-border services at all? If so, why or why not?
I sure hope so, Alejandra. I really do, because if this de minimis rule is reducing the parcel usage, it should increase container usage. So I would hope that this drive pushes towards containerized import growth and increased intermodal cross-border growth. That would be our hope for this rule. We're recently been investing a lot into our cross-border growth, cross-border operations in California and Texas. We've seen some increase in demand and a lot of increasing questions. Hey, if we made this switch, how would you handle it, type of thing. So we think that is going to increase, but we also know that it needs some more safety and security put around it. Border crossing, whether it's by rail or by truck, still has a higher liability, a little higher risk. So we're this company, IMC, as well as a lot of trucking and intermodal companies are investing into increasing that security and safety of that cross-border in anticipation of the growth.
Now, we're moving on to the next topic. Let's talk about the fees on China-linked vessels, which is also another concern that is looming for ocean shippers, which they could be facing a new set of fees that target ships built in China. if I'm not mistaken, currently it seems like the Office of the U.S. Trade Representative seems to be going through a public comment process as it modifies certain actions of the policy. So actually, I want to start off with you, Brian. Do you see any type of impact the new policy will have on trucking?
Well, like you, went to maritime school, and I got a lot of people, a lot of friends still sailing on ships. So on the personal side of it, I hope that this supports growth in the U.S. maritime sector in both shipbuilding and crewing, because it's an area where there's very little attention to. So on a personal note, I'm definitely happy and pushing that. As far as on our side and how this could affect the landscape of the industry, there's been a lot of different speculation on what the kind of effect it would have, but we've seen and in looking into it ourselves that the ships would probably have to consolidate ports. And if ship calls, and Anders would probably know, look into it as well, ship calls were to consolidate ports and really focus their growth and their volumes into less ports. And the less diversification of ports means more volumes in a specific port. So that leads to congestion. Anytime you see more volume spiking into single port, that type of congestion has a lot of downstream effects into the DCs, into the trucking community, into the delays and the delays and the turn times of trucks and rails in the ports. Anytime you create that type of congestion, you're just adding cost and reducing reliability in the supply chain. So we are hoping that this is solved in a way that benefits the ports, that it doesn't have any major downstream consequences, but does boost U.S. Maritime resiliency.
As you mentioned, Anders is our leading expert for ocean shipping. So Anders, moving into you, I wanted to have two questions. Number one, how do you see this policy impacting ocean shippers? And also, if you could touch on a little bit on how under this new policy, like, do you foresee any changes in maritime networks or shipping alliances?
Yeah. First of all, I mean, we appreciate the adjusted approach by USTR. I mean, based on the feedback they received during the review period. So I think some of the risks that Brian highlighted there with fewer port calls in US because of the initial proposal, I think that has been reduced because we think that would be a bad development for the industry to have fewer port calls and just more congestion. With the revised proposal, or we don't think there's going to be any changes to Maersk network. I mean, in general, we also don't intend to charge our customers any fee or surcharge as a result of this. It will be very difficult for us to justify to our customers why you should pay because you load it on a Chinese, built ship, and then because it's not really up to the customers to choose what vessel they load on. So we don't feel that is, it's not possible to implement a surcharge to cover any of this cost. So our strategy is more cost avoidance and deploying, Chinese-built ships on other trades because we have a big global network and we have the ability to put the ships into, Asia-Europe trade, Asia-Mediterranean, and Asia, Far East Middle East trades. Trades. I mean, our whole network, we can just pretty much put the ships on. They can fit where they can fit, and it's a pretty dynamic flows of vessels. So we won't change our network as a result of this, other than we're also not going to put any Chinese-built ships into the U.S. trades if that's going to cost millions of dollars to call U.S. ports. So I think that's also what I'm expecting to see from the rest of our competitors and the alliances. I think carriers will do what they can to avoid the cost because it's going to be very difficult to recover it via our customers. And I also think our customers are not really interested to pay higher rates because we have Chinese vessels deployed. So I don't expect that there will be major shuffles, of the networks as such as a result of this. I think over time, that will probably be more what we discussed in the first point about Southeast Asia. I think over time, with Southeast Asia growing, there will have to be more capacity added to those markets versus China, but not so much related to the fee on Chinese vessels, at least not for Maersk. I know there's few of our competitors that will probably be hit harder because of being Chinese. But it's difficult for me to comment around how they will, recover that cost. But for Maersk, we will not, as it's written today, we will not have any surcharge for our customers. So we expect that it will not create a lot of disruption.
And then onto the air cargo side, Laurent, if shippers are paying more for using non-American flag ships or built vessels, do you expect any kind of uptick in air cargo movement? If so, why or why not?
I mean, potentially, yes, it depends to what extent and if, the increase is very steep. I mean, typically we see a surge in air freight demand whenever there's tensions in the market on the ocean side as well, right? So we can foresee some impact. Yeah.
And then, well, we're nearing the end of our session. I'm gonna end with my final question, but please, if there's any questions from the audience, we'd love to get those answered. So to close off our top logistics risk and trends to prepare for in 2025 session, I wanted to end on a forward-looking note. For the remainder of 2025, I wanted to ask all three of you, what should shippers or logistic managers be focused on for resiliency given the global trade environment? I think I'll go ahead and kick it off to Anders.
Yeah, I mean, we're not seeing volatility going away anytime soon. So I think the key for our customers and also ourselves is to continue to stay informed and be adaptable and to basically maintain resilience and to drive growth. Agility will continue to be super key. I think it's a competitive edge for us in our industry, and I also think it's the same for our customers. To be agile in this environment is an absolute must to be able to be competitive. So I think that is the biggest thing. And the last thing is, I think in this industry, it's a lot about, stay close to your service providers. I mean, it's also a lot about relationships in logistics and shipping. So continue to stay close to your service providers and stay close to the market and be agile. That's, I would say, the best advice I can give to myself as well.
Let's move it over to Laurent.
Yeah, I mean, I don't want to repeat too much, but 100% agree with Anders. It's a very dynamic environment, very dynamic supply chain, and I think customer needs to adapt and accept that it's going to be a very dynamic environment, the way they're going to have to approach the supply chain needs. So diversification is key, diversification of suppliers of different markets, diversification of transportation mode, fulfillment, and be able to be agile and be able to respond quickly and well to the market, but also expect that the tension will push some rate to increase or will push some tension into their supply chain model. So you may need to be a little bit more stocks locally and so on, but you need to be able to have contingency planning for sure.
And then Brian, we'll end it off with you.
Sure. I mean, resiliency has been a hot topic since the pandemic, right? It's been one heck of a supply chain change, nonstop. But they both hit probably my top two answers as well. Relationships. This is still a relationship-driven industry. Knowing who to call, being able to trust their answer, to develop the right solution is always the key way. So the easy answer is just call IMC Logistics for U.S. landside needs. We'll take care of it for you. That's the best answer. But have multiple solutions, right? Like Laurent said, diversify, have multiple carriers, and then do your research on your vendors and your partners, because a partnership should be long-term, and you should know who they are, and you should know who they're backed by. And in this, like we said earlier, freight rate recession that we said, freight volumes are good, rates are still poor. Make sure that your partners and vendors are financially stable, right? That they can last. That's been a surprise and a sad, unfortunate effect of the dynamics of the supply chain over the last year. I've seen a lot of good companies, unfortunately, have to close shop or go out. So make sure you're partnering with those type of the companies that are good partners, you have a good relationship with, and will be there for the long term. That way, you're taking control of your supply chain and you're creating the best solution for yourself for the long term.
Amazing. Brian, Anders, and Laurent, thank you so much for your time and for sharing your expertise with all of us. I think we all learned a lot. To our audience, thank you so much for joining us. We appreciate your time. And as a reminder, we do still have a few more sessions coming up, and we hope you can join. So until next time.